association. Yeah, see, that's the association. Joe.
All right, guys. Welcome to the YMA Nation podcast, episode number 15.
15?
15.
Already?
Wow. It's going to be a good one today, right?
It is.
Who's leading the show today?
Me.
Real Estate Wednesday. Episode number 15, guys. I am Joe Wallace, and this
Rebecca Wallace.
Man, she didn't even give me a chance to even do the introduction. I am Joe Wallace, and Rebecca Wallace.
Hey, I'm excited. We got the drawing. We got information.
Good. We've had some really good episodes. Yeah, and good feedback, too. Guys, make sure you like, comment, and subscribe.
Yes.
Important, subscribe. Take 5 seconds and do it. Subscribe. Just click it.
There you go.
Good job. Give him a round of applause. A round of applause for everyone who clicked the subscribe button. All right, so let's start off with the drawing.
The
So if you are not aware, you should be aware if you've been following the podcast. But if you're not aware, every week we've been doing a drawing.
Right.
And we select winners, and the way they win is from the previous episodes, they pay attention and listen for a keyword.
Keywords.
And then the keyword, if you look down in the description, there's a link on the top. And all you have to do is just click the link. It'll take you to the website. And on the website, you just enter your name and the keyword. And you go on a drawing. For
Easy.
Free money.
Free money.
You get to watch the podcast, gain information, and have a chance to win money.
Yep.
Let's get going.
Okay.
All right, so winner number 1 for $25. Eric Holiday.
All right.
Eric Holiday. And you get a round of applause.
Yeah.
Congratulations, Eric Holiday. Thank you for watching our podcast and supporting and taking the time to actually watch the podcast
and
enter the keyword.
Yes.
Right.
Thank you.
Who's next? Our next winner is Tina Riley.
All right.
Tina Riley, round of applause. Tina, thank you so much. Thank you so much.
She's another loyal follower.
Yeah.
She won like 2 weeks ago? Last week?
Last week.
Okay.
Last week.
Yep.
Yeah. So thank you, Tina Riley.
Good job.
All right. Look at the breakdown. Right when we're finished with the drawing. So each of those individuals will win $25.
Good job.
All right. Right in time for the holidays.
Right in time for the holidays.
So are you ready to get going? And we're going to talk about Real Estate Wednesday. What is our subject today?
Loan types, and we're going to break them down.
Loan types.
So what types of loans are out there for you to qualify to buy a house?
Okay.
So we're going to break down each loan, what credit score you need for that loan, just different aspects of the loan, so people just have a better understanding. Because I had someone say, well, I got a pre-approval, and I was like, well, what type of loan were you pre-approved for? I don't know. I just got a pre-approval.
Right.
So understanding what type of loan that you're actually getting pre-approved for will help you understand what you need to actually be able to go out and find your home.
That's important.
Exactly. So we're going to delve into that. There's a lot of different loan types. So I'm going to key in on the major loan types that most people look at and get for their home purchase, for their personal home purchase.
Okay.
So we're not going to go into like hard lending. We'll get into that later down the line. So the first loan type that we're going to discuss is FHA loans. FHA loans. So you guys ready on what the FHA loans are and what the requirements are? Now, each lender, I'm going to say this before I get started. Each lender has their own set of requirements.
So this is not set specifically in stone.
This is not set in stone. Each lender is going to have their own set of requirements, but typically this is what you see out of an FHA loan.
The basics,
right? And also you have to think right now with COVID going on, a lot of the lending has got more strict during this time period.
Okay.
So what may have been true before COVID, some of the lenders have got a little more strict. And so some of this doesn't apply to some lenders that it typically would apply to.
Got it.
Right. So I'm just giving you like a baseline.
Okay.
I'm not a lender. I'm just giving you information based on
real estate agent, though.
Right.
License.
Right. Just based off of
I had to throw that out there.
Yeah.
License. Licensed real estate
look,
agent.
just based off of what you can go online and find out for yourself as
Okay.
well.
All right.
I'm just giving you basic knowledge.
Okay.
Right. So, FHA. What do you need to do to qualify for a FHA loan? And what are some other aspects to a FHA loan that you need to know about? So your FHA loan is typically a credit score of 580 or higher with a 3.5% down payment.
Okay.
So that means that you can have a lower credit score and you're really not required to put a whole lot of money down. So you can go as low as 3.5% down.
Okay.
And a credit score as low as a 580. So again, when you're getting a loan, your credit score is very important. So a credit score of a 580, some lenders may go down to a 580 still in this time period for a FHA loan. They may charge more fees on your closing costs to go down that low.
Okay.
So it's very important when you find a lender that's going to go lower on your credit score to ask them up front, well, if you go down to a 580, are my fees going to be higher? Am I going to come more out of pocket in closing costs? Because that's very important to how much money you need to buy the house.
Right.
So if you're coming up with 3.5% down and a lender is going to charge you $3,000 to $5,000 extra in closing costs to do a FHA loan, well, you may not have that much cash available.
Right.
Right. So it's very important to understand that part of if I'm going down to a 580, what is my cash going to look like for that type of loan?
Right.
All right. So next is you can go from a 500 to a 579 credit score with as little as 10% down. So there are products out there that are FHA products that will allow you to go to a lower credit score, but it is going to require you to have more money for a down payment. And also, are you going to need more money in closing costs as well?
Are you trying to start or grow your business? Well, welcome to YMA Financial, where we have created the ultimate platform for entrepreneurs and business owners. We specialize in small business startups. Our accredited business consultants will help turn your dream to a reality. We'll help obtain your business documentation, help you establish and build business credit, and whether you're working from home or storefront, we'll help fully launch your business. Check out our website at www.ymafinancial.com or give us a call at 888-531-6611.
So the more money you have saved up and the more money you have to play with, sometimes you can get away with having a little bit lower credit score. But again, in this market and the COVID era, we're not seeing a whole lot of lenders that are really going down that low.
Because of the risk margin.
Right, because a lot of people are losing their jobs right now or out of work. And so just trying to protect their companies, I can't lend to someone if the economy is telling me they may be out of work in the next month or 2 months. Right.
But I think a lot of when you talk about credit, and if I'm a lender and someone has a 540 credit score, and I'm thinking of the risk involved in that, in that loan product, then it puts my company at a higher risk of that debt not being paid.
Right. Exactly.
Right.
So that's why they normally want a larger down payment for that type of loan.
Right. Because then it helps to take on the weight of like that risk.
You're putting some skin in the game.
Right. So you're going to put 10% down. So then now you got 10% wrapped up into the loan too.
Right. And that's how I explain to my clients and you know how I have my team explain to our client base here in the upstate of South Carolina and South Carolina in general, is that the lower your credit score, be ready to have a little more cash on hand.
Right.
Because you're going to need that to be able to get into a home.
Right.
So that's very important. So the higher your credit score is, we're going to get into the products that will allow you to have a higher credit score and a little bit less cash.
Better products, better credit score, better products.
Right.
Right.
So your debt to income ratio on an FHA loan is 50% or less. So we talked about debt to income ratio last week, right?
Yep. Episode 12. Episode 12. If you missed it, go back and watch episode 12 and get caught up.
So this is why I wanted to talk about some of these things before we really got into the nit and grit of real estate, is because you have to understand the basics.
Right.
So you have to understand what is debt to income and what is a lender talking about when they say, well, my debt to income ratio is too much to buy a house, right? So we break that down. So now on an FHA loan, 50% or less. They require documented steady income.
Let me jump in real quick.
Okay.
So if they didn't see episode 12 and say they just want like a quick overview of debt to income. Can you explain it real quick?
Well, it's basically a ratio of how much debt that you're showing on your credit in regards to how much income you're bringing in a month. Right.
So if I bring in $2,000 per month in income and I have $1,000 of debt, then I got a 50%. 50% debt to income ratio. Right. Okay.
That's without a mortgage.
Right.
So you're not going to qualify unless you alleviate some of that debt.
Right.
All right. So a debt to income ratio of 50% or less, documented steady income and employment history. So we also talked about this in one of our previous episodes as well, where you have to have a job to be able to buy a house. You have to have income. You have to have a job. You have to have disability or Social Security will work, but you can't be on unemployment or workers' compensation or things like that. That's not counted as income.
Okay.
So you have to have documented income and work history. That means that lender is going to reach out to your employer and say, does so-and-so work for this company?
Right.
And verify your employment. Okay. And typically it's 2 years is what they look for. 2 years of tax returns. And what's interesting is we just had a conversation, was it yesterday or the day before that, where someone was asking, they had left their job and they were an entrepreneur for a year.
Monday.
Yeah.
Yep. Mm-hmm.
Typically what you see is that it has to be 2 years of the same type of income.
Right.
So you can't go from W-2 to a 1099, and a lot of times that will unqualify you because you have to have 2 years of the same type of work history.
Right.
So,
and one question that had came up, and I think this would be a good question too, was if I work at a beauty salon, right, and I go from there to working at a different beauty salon. So I worked at one for a year, and I go and work for a different one for a year, but I got 2 years in the same industry. Mm-hmm. How would that work? So
as long as typically, I have to be careful how I phrase it. Mm-hmm. Typically, if you're in the same industry, then lenders are able to work with that as long as you don't go from a W-2 employee in a beauty salon to an independent contractor in a beauty salon.
Right.
So, I mean, it really depends on the lender.
Maybe the beauty salon was a weird scenario, but
well, it's actually a lot of industries are that way because you have truck drivers who deal with that, who can go from W-2 to 1099.
That's a perfect example. Yeah.
So you have a lot of these industries where people are like, well, it's the same industry, but you have to see what type of pay you're on. Are you going from a W-2 to a 1099? Or 1099 from W-2,
right? Because
that impacts how you're approved for your home. With a lot of lenders. Now, there's so many lenders out there that I can't say in your particular state it's cut and dry like this or whatever. I can just speak for the lenders that I've had conversations with, and typically that's what we see.
Okay.
So in the future, we'll have us on a guest lender speaker that can speak more in depth to that.
Okay.
Okay. So, the key word is loans. The key word is loans.
Is that LOANS?
It is
With the S?
with the S.
Loans. That's the key word, guys.
Keyword.
Make sure right in the description, you click the link
And submit your keyword.
and submit the keyword. All right, let's keep going.
Okay, so, and then you have to live in the home as your primary residence for FHA. And FHA, they do allow you to get two FHA loans, but that's going a little more in depth. But it has to be a primary residence. And you cannot have had a foreclosure in the last 3 years. So again, that goes back to your credit and maintaining your credit and having a good credit history. So no foreclosure in the last 3 years for that product. And then there are the USDA loans, which is your rural housing loans, and they're 100% financing. So we're going to go into the requirements for USDA and what you can do to qualify for them.
That's what I love. 100% financing.
100% financing. Well, this is what I tell people about USDA. USDA, it is great for people who need the 100% financing option. You know, they may be on a limited income. They're in a rural area that they could qualify for the USDA, but they are a little more strenuous. So the buyer must meet the USDA monthly income caps. So to be eligible, you can't make more than 15% above the local median income.
Oh, wow.
To qualify for USDA. Also, it has to be used as a primary residence. So again, that goes back to you can't use it for an investment property. It has to be your primary residence to qualify USDA. And it has to meet the USDA's ability to repay standards. That means that it has the income eligibility. That's your steady job, your monthly income, and your tax returns. So if you see the similarities in these loans is you have to have your tax returns, you have to have a steady job history, and you have to have monthly income, and then your credit requirements. Your credit requirements, your FICO credit score of at least a 640 for the USDA loan.
Right.
So if you want 100% financing, they're going to make sure that you're credit worthy to obtain that. And then also a debt to income ratio of 41% or less.
So with that, now it opens up the door for now it's down to 41% from 50%.
Right. So that decreases your buying power.
Right.
And we talked about buying power previously as well. Y'all have to go back and watch some of the initial episodes because it builds up to what we're talking about right now, which is your buying power. How much house can you buy at a 41% debt to income ratio?
Right.
And also, in rural housing, USDA, not every area is USDA eligible. In the upstate of South Carolina, because that's where we are, a lot of Greenville County, isn't USDA eligible anymore unless you go to the far outskirts of Greenville County. So in your particular state, there are certain areas that are going to be USDA eligible, and you would have to find a house in that area to be able to get that type of loan.
USDA.
Right. So those are very important aspects to understand about that loan.
I got a question. So I'm thinking if I'm on the opposite side of the camera and you talked about a USDA cap, right? So can you elaborate on that?
A monthly income cap?
Yes.
That depends on the area. So no, I can't.
Okay.
Because the lender would have the information on their particular area for what that income cap is for that area.
The median.
For that area.
Right. Well, it doesn't matter. It depends on wherever you are trying to
located. Right.
Yeah.
Right.
Okay.
So I can't elaborate on that.
You don't have the information like for all 50 states? No. We have to
Thank you.
We're gonna have
Thank
to get
you.
a better host on.
I just said that we're gonna have a lender on.
Oh no, I was being because
Yeah.
I'm sure he won't know for every state in this
Not for
country.
every state,
Yeah, I was
yeah.
being sarcastic.
So now we're gonna go to conventional loan.
Okay.
Which conventional loan, there's quite a few different types of conventional loans, but we're just going to do a basic conventional loan. So a minimum credit score of a 620, a debt to income ratio lower than 43%, and a down payment of a minimum 3%
On conventional.
on conventional. So a conventional loan also has to be within conforming loan limits up to $510,400 in most areas, but higher in some high cost areas. So it really depends on what you're looking at doing, what type of home you're looking at, what price point you're in, as to what's going to suit you best. What's your cash flow? How much cash do you have in savings? Do you have a 401k that you could possibly pull from to be able to use for your down payment and your closing cost? Also, when you are working with a licensed realtor, you know, when it comes to understanding the loan type and understanding what type of loans that you're looking at getting as a buyer, you also can say, okay, well, do I want to do a new construction, and what are builders offering as incentives right now toward closing costs that's going to take away some of the cash that I'm going to need for that and could possibly roll that into my down payment. So
We see that a lot out here in the upstate with all the new homes that's being built and
The
the
incentives.
incentives that they're offering.
right. And if you're going into resale, you know, you have to have that licensed realtor that's going to be able to say, hey, can the seller pay some closing costs? Can the seller assist me with some closing costs so that I can get this type of loan and be able to put 3.5% down,
Right.
depending on what cash flow I'm looking at and how much money that I have sitting in savings. So the type of loan that you're trying to get is very important. And I'm going to touch on one more loan real quick, and it's a pretty easy loan, and not everybody's going to qualify for this loan because it's the VA loan. So
The veterans loan.
the veterans loan, exactly.
I love that. Thank you to all of our veterans
All of our
out there.
vets, yes.
Veterans and active duty. Thank you guys.
Yes. So the requirements for a VA loan. So we're going to, there's a lot of information about VA loans and the loan rates and what the qualifications for. I know for the most part, VA loans can typically go down to a 580 credit score. And they are no down payment, requires no mortgage insurance, which we haven't talked about, the private mortgage insurance.
And that is so important.
But that is so important, and we're going to touch on that because we're kind of dwindling on time today. But that'll be a topic for a different day, is private mortgage insurance, how it impacts your payments and how it impacts, you know, how much house you can buy. Because if you have that private mortgage insurance and let's say it's $125 added on to your mortgage insurance and taxes, well, that's going to dictate how much house you can qualify for.
Right. Because
And
it
we're
could
gonna-
lower the amount of house that you would normally qualify for. Right.
And so also we'll talk about how to either avoid or refinance out of private mortgage insurance.
Ooh,
So
that's good. Look at all this good information that you guys,
Right.
like helping you save money.
exactly.
Right.
Exactly. So we'll dive a little more deeper into that on another podcast. So y'all have to continue to watch to get this information. But the VA loan is no mortgage insurance, and it's a lot more lenient about the qualifying than other loans are.
Yeah,
so
a
it's
lot of
not
those
as
companies.
strenuous.
Yeah, they take care. They take care of us veterans.
They do. So you really just have to make sure that you have your letter, your certificate to be able to
Oh, your DD,
prove-
your DD214. At first, I didn't know what you were talking about. You got to have your. Are we still talking about
Mr.
real
Vet,
estate?
who knows
Yeah,
things.
DD2. Yeah, DD214. If you're a veteran, you should have it. And if you don't have it, you could go online, and it's easy to obtain.
Yeah. See, I'm trying to get them all the information.
Hey, that's what we do.
Yep. And if you don't know how to get to it or need assistance, you can always call into the Pyramid Group. We're brokered under Keller Williams at 864-249-1437.
That's it.
And we can help you the best way that we know how.
Tell them the phone.
I did.
One more time.
864-249-1437.
All right.
So
You think they got it?
I think they got it.
Okay.
I think they got it. So as you see in all of the loans that I talked about, the number one requirement is credit and income. Well, the number one is credit. Number two is income.
I think every episode outside of Friday football, we always harp on credit, how important credit is.
But I just want to.
I started off checking it every other week, just like most people do. Then it got out of control. I couldn't help myself. I started checking it day after day after day. I didn't realize that I was becoming addicted until my wife said something.
What did you say?
She said, "It's just a credit score, relax."
Are you checking your credit score?
Hold on.
To really make people understand that it's not just something we're making up. Like, this is stuff that you can go look up yourself.
Right.
And you can see the information is out there. You have to continue to build and grow your credit to be able to reach the goals, which is what we talked about in the
And episode 14.
Yeah.
Wealth Building Monday that just passed. But
So
that's important though. But
it is.
we're short on time.
It is.
You did such a good job on your episode.
Thanks.
Man. I hope you guys learned a lot today.
That's a lot of information.
That's a lot of information.
I have
And-
to give it to them in tidbits,
Yeah.
you know?
And what's key about what you said is that credit, it changes everything in your life, not just home buying. But in home buying, the better your credit, the lower the rate is, which again, you save money.
You save money, buy more house.
Buy more house, investment for your future.
Right,
All right, guys.
right.
So thank you so much. Thank you so much for joining us today with Real Estate Wednesday,
Real
episode
Estate Wednesday.
15. Episode 15. Good job. Make sure you guys subscribe to the channel and our Christmas toy giveaway, our 5th annual Christmas toy giveaway. If you guys would like to donate, it's on our GoFundMe page. So all you have to do is go to GoFundMe and type in YMA Cares. That is our nonprofit. We are going to give away thousands of toys out in the upstate of South Carolina on December the 12th in Greenville and in Spartanburg on December the 13th. If you want the address, if you want the times, you could go on our Facebook page at YMA Nation and you see it. And you'll see the flyer, or you could go to our nonprofit page, which is YMA Cares.
And there's no requirements outside of you bring your children to the event.
Yes.
That's the only requirement.
Yes, our phones blow up all day. Yes.
So the only requirement is bring your
the
children.
kids.
That's it.
No documentation needed. If you bring your children out,
they'll get a toy.
they'll get a toy. That's it. All right, guys. Thank you so much. Subscribe, like, comment, and subscribe on the podcast. We'll see you guys for Friday football.
View what the boss's view. You gotta sacrifice. You wanna move like bosses move.
YMA, Young Millionaires Association. Yeah, see, that's the association. Joe.